Hi and welcome back to 𝗕𝗘𝗪𝗀𝗀. Today guys, we're going to be jumping down into the world of Bitcoin, taking a look at the slightly bigger macro view. We'll be taking a look at the daily charts this afternoon, taking a look at the on-chain metrics and trying to see where we think things are heading here for Bitcoin on the slightly medium to longer term view. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at 𝗕𝗘𝗪𝗀𝗀. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into this one, though, right? So we will be taking a look at the charts, but before we do that, I think it's probably worth us just jumping down into the on-chain metrics. Okay, so let's go ahead and start here. What do we see? Well, we can see in the top right-hand corner, we have the inflows and the outflows for 2023. This is basically from the 1st of January through to yesterday, which was the 16th of April. So we can see there's 3.0974 million going onto the exchanges and 3.0732 million coming off the exchanges, meaning that there's 24,190 Bitcoin more on the exchanges now than there was on the 1st of January. And it's not a massive amount, it's kind of quite a balanced market and not too dissimilar to 2019. We also can see this depicted on a line graph, so you can see here how it's been flowing onto the exchanges nice and slowly. And on a 30-day average point of view, we can see that it's been kind of going onto the exchanges above that midline for quite some time. And we actually have seen now the first kind of meaningful 30-day average bar showing that Bitcoin has been leaving the exchanges recently. So it's interesting. Let's go over into those inflows and outflows from a line graph point of view. We can see here it's very well balanced, and this is very much exactly what 2019 was like. We can see it here. The main differences, though, are that we're 2 million short in volume. Okay, so we know that for the same time period, the 1st of January 2023 through to the 16th of April 2023, we had 3 million going on and off the exchanges. And then on the 1st of January 2019 to the 16th of April 2019, we can see it's 5.18 million going into the exchanges and 5.16 million coming off the exchanges. So we know that we're over 2 million Bitcoin short on the volume side of what's actually being moved around, transacted upon, and all of that kind of stuff. So it's hard to be as bullish as we were in 2019 versus 2023 when we are quite significant volumes less, about 40 or so%. So pretty heavy amounts of Bitcoin that just simply isn't really getting involved in the market at the moment. Which then brings us over into the wallet counts, right? What's going on here? Well, we've got Bitcoin Dust. Bitcoin Dust is basically a wallet that has over 0.01 Bitcoin in it. Okay, now this here is showing us with 11,737,000 wallets. Okay, and it is a drop from 11,798,000. Okay, so we can see it's a small drop here. Again, these are the most vulnerable retail investors, in my opinion. Now, as we come over into the kind of more retail-based wallets, we can see Krill over 0.1 Bitcoin per wallet, Shrimps over 1 Bitcoin per wallet, and Dolphins over 10 Bitcoin per wallet. Now, each of these are over a 90-day period, so you can see over the last 90 days, crazy amounts of FOMO from the retail side has really kind of driven a lot of, I say driven the market to the upside. I don't think they've really driven the market to the upside. They've been basically believing that the bullish market is here, bull run started, bottoms in, and will continue to FOMO in. This is not terribly too unusual for a retail investor to kind of believe this. It's kind of the narrative that's always kind of been shilled because it's easy to sell positive news than it is to sell negative news, at least from a investment point of view. People love to make money. Okay, cool. So let's jump back down into this, right? So what else can we see? Right, we can see that these wallets are on the increase. We can see all this money flowing into the space. Dolphins were fluctuating around a little bit and started to move back up again. But as we come up into the larger size wallets, actually, before I talk about the larger size wallets, I just want to note one thing. Each of these wallet counts is over 0.1 or over 1 or over 10 Bitcoin. This is by design. It basically means that if your Dolphins, for example, that have over 10 Bitcoin start to go down in wallet counts, it does not mean that you see an increase in the lower levels. because these are inclusive. Over 1 Bitcoin includes dolphins, it includes whales, it includes kraken. Right? This means that you can see fluctuations within these levels, but unless it drops down lower than 1 Bitcoin, as in a dolphin has completely sold all 10 Bitcoin, then you might see a dip in this line here. But if they just sell half of their holdings at 5 Bitcoin, they're still included in the shrimp wallets. This is by design. It makes us easier to kind of track the movements within these buckets of data. If we had them, I guess, more specifically, tracking anything between, let's say, 1.0001 and 10 Bitcoin, then you're going to have a line that's going to be dancing around all over the place. This way gives you a much better view, in my humble opinion, over what is going on, and it's inclusive. So let's move on into the whale wallets, or the institutional smart money funds. And this is really where you start to see the bigger picture. Again, we're just looking at 90 days here. Okay, so you can see the sharks over the last 90 days have been selling, right? These are people who have over 100 Bitcoin per wallet. So the number of wallets that have over 100 Bitcoin is been on the decrease, right? We can see that very, very significant sharp decrease. We're going from 16,132 wallets down to 15,780 wallets. Okay, so a significant decrease with the number of players that have 100 Bitcoin. But whilst we're seeing that, we're seeing these ones going up, right? Which basically tells me that they might have a little bit less than 10, but not less than 1. Okay, very unusual. But yeah, when we look at that, we can see that these pro traders, as how I kind of articulate them as, the sharks, have been aggressively coming out. Now you might say, well, the whales have been buying, so maybe they've been buying some of the shark stuff up. Possibly. But I think this whole entire move to the upside has really been driven through manipulation from the Kraken-sized wallet and the whale-sized wallet, trying to make you think that we're in a bullish market. But you've got to bear in mind, we're 2 million short on the volume side, about 40% reduction in the volume side of what we would normally expect to see during the start of a bullish market. And we also see smart funds like the sharks coming out of the space, with only retail really propping the market up, as in the retailers are providing the liquidity for the larger institutional investors to pull their money out of the space, right? They're able to withdraw because retail have basically bought the Bitcoin from them. You have to understand there's always a buyer and there's always a seller. The exchange is just a middleman, right? Sometimes the exchange wants to offload a little bit of their Bitcoin, but chances are you're actually just transacting with other people. This is why the order books are very, very important. You cannot just go to a centralized exchange and ignore those order books. They're very important to understand where people are buying and where people are selling, right? And you're basically, the exchanges are just marrying up buyers and sellers. So when you see a lot of FOMO coming in from the retail side, it's basically telling us that there's a lot of buying activity, a lot of liquidity there, and the sharks, the whales, and the kraken have been taking advantage of that liquidity quite heavily. Okay, and we can see this here. Now we can go further than this because we can go into a 365-day view. If we take a look at the retail investors, just the 1 Bitcoin holders, the shrimps, they've been aggressively buying up every dip. And this is because they believe that this was the bottom. The bottom was in January. No, maybe the bottom was in over here. The bottom was definitely in May. No, the bottom was in June. We've got all those fantastic indicators telling us the bottom was in June. No. Okay, so we started buying. You can see that line going up there. And then November comes around. The bottom is definitely in now. Bottom's in now, right? And they continue to accumulate up, right? And they're buying and buying and buying. And just another dip here, we'll buy it again, right? So you can see how this line is going up, right? These retail investors are buying every single possible dip known to Bitcoin's chart. And this is because they're trying to catch a falling knife. They're basically looking for a bottom. It doesn't really matter. This idea of getting a bottom is really not that important. The most important thing is getting confirmation that you're actually in an upward directional move. And I don't think we've got that confirmation yet, right? So a lot of people are coming in a little bit too early, but some profits have been had. Not that I think retail investors are going to be cashing out just yet. I mean, possibly they are. Let me know if you are taking profits at the moment, because I do think that's a wise idea. But this is what's going on with the retail side. But what's going on with the institutional side? Well, this is what's going on with the institutional money. And we can see that they're not buying into the idea that the bottom is in over here in June. Okay, they didn't look at those indicators, those magical indicators say that the bottom was in. They were selling into the pump that preceded it. And we were watching this and we were saying, well, we don't have a trend-based structure taking us out of the lows from June. And we could see that these institutional investors were selling into that pump. They sell into pumps and they buy into dumps, right? This is very fundamental basic. And so when we see this, we can see that they are basically coming out. And therefore, we were quite happy back in June, July, August to say that a new lower low had to occur, because it doesn't make sense that whale investors are going to be basically selling a bottom, right? That's not how these guys work. They would have been buying this dump to the downside, not creating it. Then, of course, we go over and we can see that they continue their selling pressure all the way up to November. And again, you can see once again that November low, these guys have been aggressively selling into the pump that preceded it, and they continue to do so. So although on that 90-day view just here, it looks like they are accumulating, actually, if we take a look at a zoomed out version of that graph, we can see that that's actually not that impressive. And at the moment, really, what are they doing? Potentially pushing that price up into this bear market rally to catch out and grab as much liquidity from those retail investors as possible. But you might be thinking, well, maybe times have changed. Maybe, they're not going to be doing exactly the same things that they had done previously. And, Bitcoin's a lot more expensive now than it was before. Sure, these are all things that retail investors are going to want to try to do to justify the idea of a bullish market, but that's not what the data tells us. Okay, there's a lot of money out there. And if anything, the wealthier are only wealthier now than they were, 10 years or 5 years ago. It's important to note that essentially the gap between the poorer people and the rich people is just widening vastly. So although there's a lot of kind of minds out there, retail minds, trying to justify the idea of why we see these whale counts going down, yet we can see price going up, and wanting to justify the idea that they're in a bullish market because that's what you want. The data here is quite clear, regardless of narrative, and that is that unless these players come in, I don't see how the price is going to be pushing up terribly too much further. And instead, I do see this price coming down and all that liquidity getting grabbed. There's always a buyer, there's always a seller. I say this time and time again. If we want to see these whale investors coming into the space, we need to see someone sell Bitcoin to them. Okay, they need to go acquire Bitcoin. The only way that they're going to acquire Bitcoin, in my opinion, is for our retail investors to get shaken out of the space. Not all of them, just a large chunk of them. So we have to be bearing in mind that at some point, something has to happen here that is going to enable these guys to get in. And they haven't done so yet. They're not going to be paying premium prices. Not when they were selling down at 15,000. There's no way that they're going to be buying at 30,000. That's not how that works. But there is one other concern that we have. If I come back into here, we can see that the Kraken size wallet has been accumulating. And yes, this is something that the Kraken size wallet has done in the previous bear market as well. Let me see if I can find it. I think it is this one. Yes, this one here. You can see that during this peak of 2017, they didn't really participate until they got down to this local low down here. It was a couple of months in. Then they start to accumulate, and they accumulate during this bear market. There's a couple of moments where they pull to the downside and so forth, but they accumulated all the way up to here. During this flat period of time here, they start to offload a little, and then into this final movement to the downside, they flood the market with excess Bitcoin, bringing in the bear market low. I talk about this because whereas there is no guarantee they do this every single time, but if we take a look at the current setup, what do we see? Well, we can see that they've been accumulating during this bear market, and I think we're going to be getting somewhere soon where they actually start to flood that market with the excess Bitcoin. I could be wrong, might not happen, but at the moment we aren't talking a huge number of players here. We're talking 121 wallets with over 10,000 Bitcoin. We know MicroStrategy is going to be one of them. Maybe Elon Musk is another, I don't know. But you kind of get the idea, right? There's not many of these people, but these are the ones who are going to be dictating whether a price action goes up or goes down, and they are looking for liquidity. And why would they be buying all this up here at these higher prices only to bring it down lower later? I think it's because they're actually in cahoots or working alongside those whale wallets. I think ultimately what's going on is one of two things. Either they are independent and these guys are just long-term, accumulate as much as possible, don't worry about the pricing, it's all cheap in the long run. 10, 20 years from now, it's going to be ridiculously expensive. Or alternatively, the other idea is that actually the Kraken is cold storage for the whale wallets, right? So they have like a warm wallet or a hot wallet that they use to kind of move the market around, and then they dump off over their profits into a Kraken-sized wallet, and then they use that Kraken-sized wallet later to bring the market down even further and scoop up even more cheaper Bitcoin. But I'll leave that for you guys to decide. I can speculate on what that might mean, but the data here, if we just follow it, is quite clear. Big money is coming out. It is not going in. The only money going in right now seems to be from retail investors. So let's jump back down into our charts. Okay, so as we kind of take a look at our smart money concepts, we can see that we start to see a little bit of a downturn here. We are coming down out of our oversold area. Overbought area, just looking to come down a little bit. We do have our fair value gaps and we still have our bullish structure in play. Equilibrium seems like a nice, comfortable area to be, but I do think we have to come down into those lows. Around 18K, I think, on the weekly time frame would be a pretty healthy number, but we'll have to obviously see how this kind of plays out over time. Like I've said many times before, higher highs, higher lows have a tendency to break to the downside. We can kind of see that here. We are looking for that breakdown. Whether it's now on this daily chart or not, we'll soon find out. But we are looking for a move to the downside overall. That hasn't changed. And I think really this market that's being kept buoyant and kept up isn't going to last forever. How long it's going to take to move down, I do not know. I do not have a crystal ball for that. Timing it is going to be one of the most difficult things to do. But looking at the data suggests to me that we have a high probability of a move to the downside at the macro level. We cannot continue to push up like this, and I do think retail money is drying up. And the second that it does completely dry up, I think it's going to fall very, very fast. As soon as essentially there is no one looking to buy, the whales will turn that tap off, and I think we will start to see the price action move back to the downside. Let me know what your thoughts are in the comments down below, but I'm not confident on a macro level of a bullish market. Let me know what you think. If you found this useful and informative, smash that like button. I'd appreciate that. If you're new to the channel, then why not go ahead and subscribe? And don't forget to join us down in Discord. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.